everyone, John Henry here, slingshotfutures.com, and welcome to the Daily Futures Market Outlook, where we take a look at our big six futures markets, and that's going to be the Bund, the Euro, Gold, the Bonds, crude oil, and the S&P 500, so we can formulate an attack method for tomorrow's trading, so we can be as prepared as possible. Now, when we're looking at the overall move, there's a lot of things to consider today, because obviously over the weekend we had the French elections, and there's all kinds of fun stuff going on there. But before we jump into all of that, make sure to swing on over to the website, slingshotfutures.com, scroll down and click on the Join the Daily Outlook newsletter. That's going to add you on to our free newsletter, which you're looking at right now, where you'll be notified every time it comes out in your email box, and that's going to cover not only this video, which you're watching right now, but also different stocks that we're keeping an eye on, different long-term plays, different statistics, etc. So a really good newsletter to get your hands on. Along with that, at the bottom of the page, every single day, we go over a market psychology video, just basically ripping a market apart and figuring out what made it tick, pardon the bad pun, and basically just using that information to help us become better traders every single day. And then, of course, we have our live trader morning prep levels, which are posted every morning for the big six as well, so you have all of the major levels of support and resistance going on for that day. Now, if you haven't done so already, the live trader subscription trial info box right here, you can sign up for a one-day trial in the room and see what we're all about. If you really enjoy your stay, you can always subscribe to either a weekly or monthly option, and if you really enjoy it, if you become a VIP member, the live trade room comes with VIP membership, so you never have to worry about paying anything ever again. Now, looking at the Bund, first of all, let's make something very obvious. We're going to see this on a lot of charts. There's a big gap, right? Now, with the French elections, again, that did cause a lot of gapping in the markets, and this is an example of that. We have a lot of movement overall. So one thing to consider, we have a big weekend gap, and eventually that weekend gap is likely to fill. Usually, weekend gaps fill the same week. This time around, this weekend gap is driven on major fundamental movement. So it might not fill this week, it might not fill this month, it might fill tomorrow, right? We don't know. But chances are, given the size of this, if it is going to fill this week, it's probably going to be like Thursday or Friday, maybe into next week would make a little bit more sense. And that goes for all of them with big gaps today. Now, the one big thing that stands out here on the Bund is simply that first candle, right? That first candle, as soon as we opened up, was a huge dive lower. And then it followed through, right? Beautiful bearishness continuation, ended up with a doji and then a complete reversal right back up. So that creates a major area of contention. The buyers and sellers are going to be fighting over that first couple candles right there and there. And you can see as soon as it came back to the highs, it acted as major resistance and dropped all the way back down to almost that area of support. Now, because they missed it, that did form a new wedge bottom coming in. And we did also make a new high a little bit later in the day, forming a new wedge top. So we do have a slight bullish bias, right? We are grinding our way slowly higher, but we're not really gaining a whole lot of ground to the upside. So really what I'm looking for here is for the buyers to want to get a break out of this pennant that we're getting right here, kind of a spike and a flag, but the flag looks more like a wedge. So with this little pennant formation right around 161.46 is major support, and we're looking for a bounce here right back up towards the highs. And from here, you know, there's one of two things that's going to happen. The first one, we're going to hit the top of this pending kind of channel wedge high, and we'll just stop and turn right back around just like we did here, right? They come back up to the highs, they hit it, turn back down. The other thing, which is what I would really like to see, especially for getting long down here, is a breakout through that level, kind of a fake break, an exhaustive break. They spend all of their bullets to get a breakout above, and then it fails down. So a nice profit-taking opportunity if that is the situation. Either way, I'm looking to be a buyer on a pullback here, and the pullback may be, you know, a little bit higher up from where we are right now, but overall, yeah, looking for a little bit of a breakout to the upside for either exhaustion or a stop, and flip right back around in the opposite direction. Now, the euro. The euro is one of those scenarios where we have a huge gap higher, and then it pulled all the way back down. We started off the week with a very strong bull bar and then never came back. It never even came back to those highs again. So the fact that that area was so aggressively bullish and then it just completely shut down shows us that we may have an area of support or resistance there. And you can see they broke out below it, retested it, retested it, retested it, retested it. The area was no joke for most of the day. Now, we are getting a little bit of a bull sentiment and forming a slight wedge. In this wedge, we are near the top of, but we're in mostly a range, right? We had a fairly down biased day with that first candle completely failing on the week, but really in the grand scheme of things, we just have a big range that we're trying to play. So buying low, selling high makes a lot more sense here. And in all honesty, given the overall big gap higher, I still, even though it is mostly a range and we did have a failure right from the start of the week, it's still kind of an inclination of ours to give the bias to the buyers. They had the strongest move with that big gap higher, so we have to assume that the buyers may just be reloading on this pullback. Either way, though, we still need to treat it like a range. So major support and resistance on the range is 91.15 at the highs and the lows 86.08. And just looking to play both sides of that with a preferential bias to the upside. I would rather buy 86.08 rather than selling 91.15, but both areas are an area of support and resistance. Now, this location, if we do get a breakout to the upside and the buyers do end up prevailing, I would like to see a breakout, pullback, use it as support, and then shove the market right back up to a new high. Either way, we're in a range. We know what to do with the range. Buy low, sell high, stay out of the middle. On gold, kind of the same thing as the euro, but one big difference here, one caveat to this versus what we saw in the Bund as well, that huge starting candle for the week, this massive candle with a brick top high, that area has yet to retest. Now, we saw in the Bund, the first time that area retested was a drastic drop lower, dropping almost 80% back down to the lows. So if that's the case, we're looking for the same thing. Major resistance at 1280, because it's been a day and we still have yet to retest it. We may get a little bit of head faking above it, but overall anticipating a fairly large drop down. Now, it's going to be really hard to want to be a seller initially on that level unless you plan on scaling in or utilizing a large account, because we have a bullish trend right now. From the lows that happened a little after 8 o'clock or so, we really haven't stopped going up. So it's going to be tough to want to be the first seller to that party. What I would rather wait to see is for them to react, right? Show me what they want to do and then jump in from there to catch the dive lower. So either way, looking to sell up at the highs, but I would rather give them a little bit of time to show what they want to do. Otherwise, in the short term, looking to buy up in towards that level, up to 1280, so we can flip gears and shoot back down again. Over on the bonds, the bonds, man, they really started off with a big range. We had that big spiking candle again to start the day or the week off like we saw on all of the other markets after the big gap, but they just got stuck. They could not get out of their way, out of their own way, all inside here for a good portion of Sunday, all of Sunday, and most of the day today. We ended up not breaking out until around 8 o'clock. So with that massive failure that we had for any movement, up or down, doesn't matter, that really gave us a bias of a range. Now, we did break out aggressively to the upside, and that created a nice bull trend with a spike in channel. So the buyers, really what they're going to be looking for here is a deep pullback, probably to around the top of that range area, and that's going to be at around 153.01 to 02. Looking for buying support there to push the market up one more time. The big issue that I have with being a buyer here is we are in a major area of resistance. We have a huge level of resistance at 153.18, and I am not really interested in buying through that. So if you are going to buy a pullback, for me personally at least, I would rather be looking for maybe a retest of that, maybe even slightly lower than that, so I can flip gears to the sell side and drive the market back down again. Now, we are getting a nice reaction off of this level, and if we do head fake above it, I would expect to see a lot of sellers above that high. It would make a lot of sense in this context. So overall, looking for selling pressure off of the highs or a short-term scalp buy back towards the top. But again, that 153.18 area, not much of a joke. I wouldn't want to play around with that trying to get a target through it. I would rather get filled underneath it. Over on crude oil, we had a slight gap higher, and then it gave it all back, right? Never came back. Continuation of that massive bearishness that we've seen over the past several days now. And, well, they ended the day in a kind of a wedge. Now, with this amount of bearishness, if we zoom out, you can see what we're talking about here. We had this massive dive lower. They paused for a good day, day and a half, and then continuation to the downside. In the grand scheme of things, this really just looks like they tried to break out of the range on the highs using news as their catalyst and failed. So right now we're kind of at the bottom of the range. This doesn't look that good for continued bearishness. So what I would rather do, knowing that I don't want to sell too low now because of the context, right? We're mostly still stuck at the bottom of the range. I would rather look for a sell between 45 and 50. if not a little bit higher up. That area right around 49.80 still looks really good, especially considering all the failure they had there from the Sunday open. So looking for short-term selling opportunities out of 49.45 to 50, and really good selling opportunities out of 49.80, all potentially attempting to go back down to the range lows, which in this case looks pretty good around 49.20. And then finally, the S&P. The S&P, after that huge gap, really didn't get a whole lot accomplished. We haven't really gone anywhere. We're stuck in a range. Range high seems to be best around 76 up to 76 and 3/4. Lows 66 and 1/4 down to 65 and 3/4. And we're just bouncing around. Now, there are a lot of levels of support and resistance inside here. We can see a nice level of support at 68.75, maybe adjusting a little bit lower now that we have more information at 68 and 1/4. And the area of resistance at the highs looking pretty good, honestly a little bit higher. I would have marked this personally a little bit higher at around 75, maybe a little lower at 74.5, and they missed that as well. So we are forming a little bit of a wedge, and there are some intermediary levels of support and resistance to watch out for, but the big levels that I really want to play in a range are the extremes. And the extremes, we still got a little bit of a ways to go down and up. We're still in the middle of nowhere of the range, and we know, again, what to do with the range. Buy low, sell high, and right now we're smack in the middle where we don't want to be. So we need to put our patience pants on, and we need to wait for the S&P to kind of come around and come to us so we can strike as we see fit. So that's going to do it for the outlook. Now, again, looking at the news for tomorrow, one big thing to keep an eye on, obviously the French elections and all of that stuff is going to be shaking up the markets for probably most of the week. So that can kind of remain on the back burner, even though it is a big announcement. Tomorrow, we do have some news. First of all, Australia is a holiday tomorrow, all day. It's the Australia Anzac Day, ANZAC. I don't know if that's supposed to be an acronym or a word, but Anzac Day. At 10 o'clock tomorrow in the U.S. session, we have the CB Consumer Confidence, forecasted at 122.5. Previous was 125.6. And then we also have the new home sales, which is forecasted at 583,000. The previous was 592,000. Now, tomorrow night at 21:30, we have some news out of Australia after they open back up. The CPI quarter over quarter forecasted at 0.6%. The previous was 0.5%. So really, the only news we have to worry about tomorrow is going to be at 10 o'clock for the U.S. session, and that's about it. Now, for you European session traders, again, obviously the elections are going to be a little bit crazy, so just play it a little bit safe because it could cause unwanted movement. So just kind of keep that in the back of your head. But outside of that, that's going to do it for today. Like we always say, make a plan, trade the plan, follow those rules, and you'll be A-okay. Until next time, we'll see y'all later.